What's going on, you freaking degenerates? In this video, we're gonna go over something that I think is just purely clown stuff. Check it out. All right, guys, you know what time it is. It's time to call out what I think is total bullcrap, and this is a doozy. Check it out.
If you are a new trader or advanced trader or break-even trader, just listen to this. I don't care if you've heard it before. Listen, because you should, right? Because if obviously, forget it.
Bro, look, man, I'm gonna dissect this strategy, but before I do, I don't really give a crap if some of you are gonna get all butthurt about it. I'm gonna say something here. That was some Joe Biden ass crap stuff right there. It's like a whole lot of stuff was said and nothing was said. Anyways, let's get into the strategy. Let's see what's up.
You listen to this. You have to. Okay, so we're gonna put it like this. Let's say we have a 1-to-1 risk to reward (RR). Okay, and then let's
Terrible risk to reward. A 1-to-1 risk to reward means you have to be right over 50% of the time to be profitable. If you put yourself in proper risk management setups, all right, in proper risk to reward setups where you can manage your risk truly, you could easily put yourself at least in 1-to-2 risk reward setups. It's not to say that you won't take some positions off partials at 1-to-1, but you will hold on. If you're in a proper setup, in a proper pattern, you will be able to hold on to 50% or more of your position for that 1-to-2 and then 1-to-3. But let's continue watching.
This is what seems to be the most profitable, right? So,
like the air quotes, this is what seems to be the most profitable. He's the one teaching us a strategy here, but it seems to be the most profitable. What is that?
let's say you go in the longs, okay? You take a long position. I know market replay is stupid, but for this concept, I'm just gonna put it here. Obviously, we know what's gonna happen. It's not like we don't. We got the longs, right?
We got the longs. Listen, we got the longs. This right here, you can tell, all right, it doesn't take a master chartist, okay, a 25-year-old veteran chartist to see where your potential support zone is. That potential support zone, follow my mouse, would be underneath this level at a minimum, just going off of this chart that we have in front of us, which is a 5-minute chart on the NQ, okay? The previous resistance zone broken to the upside. There's no volume on this chart because who needs it apparently? We pulled back into it, held it as support. Now, if you know how to trade, you know damn well that if you're getting long on this setup right here, your stop is underneath this support zone. That's where it is. It already showed its face. That is where your stop zone is. If you got long up here, your stop zone is down here. You better mitigate your risk with taking proper position sizing to account for that risk to the downside here. Because what will happen more often than not is that if you're long and you take your stop and you place it underneath here or anywhere other than where underneath support is, you might get stopped out. And then you're going to take it to social media. The market makers got me. No, fool, the market makers didn't get you. You just placed your stop zone in a trivial place, in a place that it had no business being. Now, let's see what he has to say about that.
Anyway, let's say you're going longs here, right? And you enter somewhere over here, right? Because we hit demand.
Did you see where the stop zone was placed? It was actually placed in the right spot. I was like, damn, he got it. He's going to get it. It's right. But not so much.
And you have a 50 tick stop loss.
Why do you have a 50 tick stop loss? That's just a number that one pulls out their ass. That's what it is. It's a number that one pulls out their ass. It's a 50 tick stop loss. What? The chart pattern, the chart setup dictates where your stop loss zone goes. Then you, right, control how much you risk on that trade by position size. We've already placed the stop zone or the stop loss well above the support zone on a long, or should I say the longs.
All right, so we already know what's going to happen. This is just an example. Risk management, okay? and you have a 50 tick first target, 55 tick first target, and a 55 tick stop loss, okay? Because that's usually what I do. I do 55 and 55, okay? So we'll put it in this perspective, and let's say, okay, boom, we get in right here, okay?
You got stopped out. You see what I'm saying? You get stopped out and this thing just keeps going higher. Why? Because the stop was placed in the incorrect zone. Guys, this isn't rocket science. All right? The chart tells you, it screams to you where the stop goes. It screams to you where the profit target areas are. The chart tells you everything.
So let's say this trade works out, okay? And our first profit target hit. Because this is a high for me, right? I'll usually scale out of half of my position depending on momentum. And then what I usually do at this point is I end up moving my stop loss up. When I hit my first target, which is 55, 50 ticks, I move my stop either to break even or maybe to 15, 10 ticks, depending if we're at a key level. But right here, we're not at any key level. Our key
Look, I'm going to tell you, there's nothing wrong with moving your stop loss up after the first take profit. I do it every once in a while. I definitely do it after my second take profit because you got to give these trades room to breathe. But there's nothing inherently wrong about moving your stop loss up. Now, just be ready to be stopped out most of the time after that first take profit if you always move your stop loss up after your first take profit zone gets hit. Because that trade, it's still in the consolidation phase. Okay, look, this is your high, not this. This is your high up here. This is your consolidation. We're above support, underneath resistance, and we're consolidating. There's nothing wrong, in my opinion. You got to bounce off that support zone to take a little piece of profit off, put it in your pocket, protect yourself in case you do get stopped out. Nothing wrong with that. Some people will tell you that, no, we hold it on. I don't know, man. I like to scale in and out of my trades. So nothing wrong with taking a piece of profit off there at all, in my opinion. Moving the stop loss up to break even immediately, not the best, not the best, not the best.
key level would be somewhere here where I would have to be at 50 ticks. Why not just get stopped at break even? If we fall down, we're gonna go back into this area. That's how I.
Key levels, guys, aren't just because you came up with a number, 50 ticks, 25 ticks, 100 ticks. That's not how you come up with key levels. You don't make them up. The chart tells you. And the key levels, you're going to grab them from larger time frames. The bigger the time frame, okay, the better. When you see that a certain price point gets hit very often, that's how you identify a key level. You pull up that 15-minute chart, the hourly chart, and the daily chart, and you find your key levels. Where has the chart touched a certain level the most amount of times? That's a key level, not just a random ass 50 tick.
I see it, right? But obviously, eventually, if we keep running the trade, we head into demand, which allows us to hit our next TP, which my next TP would be 100 ticks, right? And then after that, you would definitely still have here and ride up the rest into whatever area you want to, if you feel like it's this high, because
not before you got stopped out down here, but I digress. The point is that you got to set your stop losses in the right areas. And some people will come down in the comment section with some BS about, oh my God, Jesse, you're picking. No, I'm not picking on anybody, bro. But these people are out here on social media, on YouTube, on TikTok, on Twitter, spouting out such incoherent BS that then you, new traders, go out and do this, get into your evaluation accounts, blow up left and right, right? And then you're like, oh my God, but why? Why am I blowing up? Because you're doing these things. You're setting your stop losses in the incorrect areas. Completely incorrect. I mean, look, it's evident right here. I don't even know how the guy used this chart for this example. I mean, if you're going to do an example of a trade setup, you want to actually take the time to grab a chart that actually shows you a setup that you're trying to educate somebody on. Like, for example, bang, a nice bear flag setup here for a short. And this is a trade I took. Okay? That's what you want to do. That's what you want to use. You want to use a chart that actually has the setup working properly, but that's not what happened here because 56 stop loss isn't a strategy unless the chart pattern is showing you your stop loss is at 50 ticks. Oh yeah, before I forget, supply and demand zones. It sounds fancy, doesn't it? It makes you want to buy a course, doesn't it? Same crap as resistance and support.
Talk about 1 minute. 1 minute. You would have made like, let's just say 450, because you would actually make 500, but we want to be as realistic as we can, right? Okay, you get 1 mini, you ride up to 100 ticks, you move your stop to break even when you hit 50 ticks. We never went back to 50 ticks. You end up hitting that 100 tick, and you sold for 450, maybe 550, maybe 500. You hit 100 ticks with one contract, okay? Now, this is where the bad happens, right? And this is why it's not, you guys got to listen to your risk to reward, right? So we talked about 1-to-1 RR, 3 losing trades, and you're out. So let's say the next day comes up. I'm so late with this, but let's say you go into a next trade, and on that next trade, you hit a 50 tick stop loss, right? You're like, oh shoot, man, I just hit my 55 tick stop loss, right? You just hit your 55 tick stop loss, you never hit your reward, right? So there you go, losing the first trade, right? You go, boom, you lose another trade, you lose another trade, okay? So you lost this trade, which lost you 250, okay? And then you lost this trade, which lost 250 as well. And then you lost this trade, would lost you 250. This trade, you lost 250. So you lost 250 in total of 750.
That's the problem with one-to-one. Like if you're just going after one-to-one, that's literally the problem there. You didn't even make $500 on the first trade because he said it wanted to be realistic. So you only made 450. I don't know. I guess he got nervous and hopped out of the trade before it actually hit the profit target. So 2 trades later, you've lost all your gains plus an extra $50. So now you're in the whole 50. And then you took another trade, lost another 250. So now you're in the whole $300. So maybe the next trade you get it, and boom, you made 450 and you made a couple bucks back. This is the problem with the one-to-one risk to reward. Do not go out there and try to make a living off of one-to-one risk reward setups. You're gonna have to be right. Professional level status, talking about 70, 80% of the time. Okay? If you're right 60% of the time, then you're doing great. You're doing great, especially if you're getting 1-2 to 1-3 risk reward setups, not this nonsense. Guys, please, bro. Oh my God, bro. I get frustrated, honestly, because I remember when I was a brand new trader, what it felt like getting on YouTube and seeing all these things. And one of the very first strategies I gravitated towards was that one-to-one risk reward type setup, scalping at the bell on low float penny stocks, because the guy with the ponytail said that micro pullbacks were cool. And it's just a disaster, one after the other, one after the other. And I just hate to see new traders. Man, they come into the Discord all the time. Free Discord, link in the description. And they're like, oh, Jesse, I saw your information, and man, it slows down the trading so much more. I can really be more disciplined. Bro, because when you trade actual setups and actual patterns with actual key levels, it slows down the trade a lot for you. You don't have to be nervous because you know exactly how much you're risking per trade, because you've already been taught, right, how much you can lose. You feel comfortable losing per trade, and then you've been taught how to actually and properly identify the zones on the chart, identify where you want to enter, identify where the chart tells you the stop zone is, and identify multiple take profit zones for you to scale out of your trade. And that makes it so that you don't get nervous. One of the biggest problems you're going to have as a brand new trader is being nervous to click the buy button or the short or sell button. In essence, you're going to be nervous to open positions after you get slapped up a couple of times doing nonsense like that you just saw on the screen. And the key here is going to be very easy. I'm going to tell you right now, okay? Lower your position size, Make it so that the dollar amount that you risk on every single trade is a dollar amount that doesn't bother you. Then you can go to sleep and wake up the next day ready to trade, ready to learn. Okay, that's what you want to do. Now, you don't go out into every trade with the same position size. You go out to every trade with the same risk, in that you have one simple dollar amount that you're willing to risk on the trade. Your position size will be dictated on where the stop loss is, and the stop loss will be dictated by where the chart says your stop loss goes. Guys, that's it for me today. I'm not even going to continue with this video. Smash the like button for me, subscribe to the channel, hit the notification bell. Thank you very much for watching. I'll catch you guys on another one. Remember to check out the description section for all the comments and all the discount codes on courses and prop firms and all that good stuff. Thank you very much for watching. Catch you on another one. Peace.